Hello and welcome to Assay TV. Today we're hearing from Skeena Resources, a Canadian mining exploration company focused on the Golden Triangle of British Columbia. And I'm joined this morning by Walter Coles, the President and CEO of Skeena. Walter, welcome to Assay TV.
Leo, pleasure to be here with you.
Fantastic. And tell us a little bit, in about sort of 30 seconds, give us a quick overview of the company.
Sure. Skeena is a precious metal explorer developer. We really have one major project. It's in British Columbia. It's in the Golden Triangle, and it's a past producing mine. It's called Eskay Creek. And Eskay Creek, when it operated from 1994 until 2008, it was the highest grade gold silver mine operating in the world. So it shut down during the global financial crisis, and it was operated by Barrick, and we have optioned that closed mine from Barrick with the idea of trying to reopen it.
Fantastic. And you recently put out a PEA on the project.
Yes, we did. It was a PEA that exceeded any of our wildest dreams, to be frank about it. It had incredible economics. When I put in yesterday the spot prices for gold and silver, the project has an NPV of 1.3 billion after tax. It's got an IRR after tax of 80% and a payback period on 300 million of CapEx. It's got a payback of less than 1 year. I mean, these are the kind of returns that people used to talk about getting in oil and gas over the last decade. And finally, mining is sort of, especially gold and silver, is coming into its own. And now we're able to sort of bring forward projects with these kind of spectacular financial metrics.
Fantastic. And you have an option to buy this from Barrick. What are you how are you gonna acquire that later in the year then?
Absolutely. Yeah, we have until the end of the year to exercise the option and buy the asset, and 100% we're going to do that. The purchase price is 10 million. This is an asset with over 4 million ounces of gold equivalent right now. It's open pit. The grade is over 4 grams per ton, so it's got exceptional grade. It's in a politically stable jurisdiction, British Columbia. It has strong support from the First Nations and the local government. So it's rare to find projects that have the kind of size. This one will produce at least 300,000 ounces a year, have the kind of size and in the right location and fantastic financial metrics. So
$10 million, that's quite a bargain.
It is.
And COVID, how has that affected your operations?
Well, I think just like everybody, it has certainly affected us. We had to stop our drilling in March and just sort of take a time out and make sure that everything we're doing is going to, not put our employees at jeopardy. So we've taken a break, but we think we've come up with a protocol to have our people safely go back in, and we expect to start drilling sort of in the middle of June, and we'll gradually ramp up to 10 drill rigs so that we can aggressively advance this project towards pre-feasibility and hopefully feasibility next year.
Fantastic. So we should be seeing lots more results coming out over the coming weeks and months.
Absolutely.
Fantastic. Well, thank you very much for joining us today.
Well, thanks, Leo. Thanks for having me.